Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, February 16th, 2024. Markets are now closed, and I wanted to do a after post-market weekly wrap today, just based on what I'm seeing. I think next week has the potential to be a big week, and maybe the week where we have a first solid sell signal, multiple sell signals. Again, potential. So what I'm doing, look, I like to do, it's what the site's all about. I lay out the levels in advance. Does nobody any good to tell you, after something's turned, where it's too late to get in or out. So these are the levels to watch, and maybe they break next week, maybe they don't, maybe one of them breaks and the rest don't, and everything bounces off those support levels, and then that one that breaks down probably snaps back. That's how it works. So again, it's why I spend all the time going through these multiple charts. This video will not be too in-depth. I'm going to just keep it very simple. These are what I've been sharing lately, is what I call my clean boards. I don't have a lot of support resistance levels, just the most salient, the most significant important levels that I can see right now, and that's these uptrend lines off the October lows. Don't want to beat a dead horse, but I do think they're very technically significant. Of course, that's coupled with divergences and everything else, including the recent sell signal there. We've had a couple, the market's taken a couple of gut punches lately on the economic data, and obviously, and it's funny because I can almost write the headlines in advance. We had the breakdown here, but the market attributed it to the hotter than expected CPI. Yet we got the sell signal the day before. We're already short. Then we bounced from right here, and then they attributed it to the market dismissing it, shrugging it off. But yet we already, as an active trader, covered a short right there. It was laid out, and expected a bounce, and it backfilled the gap. And remember the gap. So next week, headlines, whatever. We'll get into that. Here's what I'm going to do. I don't want to get too off on a tangent. I tend to do that a lot. We're going to just cover the indexes. Very simple. We already just looked at SPY. That's it. We closed a hair above the trend line. We're still above trend, but I still believe a breakdown appears imminent and likely. Imminent is probably next week. I'm going to get to the economic calendar at in this video. So there it is, SPY. No sell signal yet from the more significant daily time frame here, but certainly could happen next week. Oh, and remember, markets are closed Monday. That's another reason I wanted to get the video out. We have an extra night of overnight risk. Anything can happen. Remember, you don't get economic reports over the weekend. Bullets have been flying in the Middle East for a while now. The market's been shrugging that off too. Look, I'm not expecting anything over the week. I'm just trying to say there's one extra day, which could trigger something that causes the futures to go either way. Usually down. Again, since you don't have any economic releases or earnings reports, there's usually not a lot that's going to send the futures higher on the weekend, just down, especially when you're in this technical posture. But QQQ, and the futures do trade. The markets are closed on Monday, but the futures will pick up and trade. There's some abbreviated trading sessions, but they will trade before the market opens on Tuesday. QQQ, right on the line. Again, this is the clean board. There are other levels and things to watch, but that's it. Breakdown with the minor wedge. Again, the sell signal came early on the 60-minute chart. Hit the trend line, bounced as expected last 3 days. And again, today, look at this. It's just hugging the trend line. It just shows, you can see it here in the indicators. These are momentum indicators, PPI, the RSI. Momentum's waning. In a strong uptrend, you hit a trend line, you bounce, a buyer step in. You had another bounce there at a higher level and went on up. You hit it there. You had another impulsive thrust off. Now it's been very weak, So anyway, we'll see. As I like to say and often do, support is support until unless broken. I told you today I've increased short exposure. I've taken, 2 more individual stocks that I shared with you today. I'll get to those in a second in the video. One more index because I did, somebody asked 2 days ago and I shared my thoughts on IWM. Still hanging in there. Again, that's just me. Doesn't have to be, nor should it be you. Do your own trading based on your own things. But as I mentioned, IEF, which we're going to get to in a second, the part of this video, once I'm done with IWM here, those are the 3 major indexes I follow. There are, of course, the mid caps in there as well, but I just like to look at the large and smalls. And we're still above that previous high. It's a little concerning. I said the other day the fact that we already fell after that breakout. We failed and we went back up. And so I mentioned you may not want to short until we fall back below there. But with things have changed, a couple things here. You can see, we made effectively an equal high with lower highs on the indicators now. So all the better when you have negative divergence at that high at resistance. And also, I think this is blown out. I have little doubt it's blown out a lot of short sellers, but we'll see where it goes. But again, this is all. I'll get to IEF here next. When we're in that yellow zone, that's because interest rates have ticked up and remain there at elevated levels compared to recent levels. And small caps are historically the most sensitive. They are the most sensitive. They're just like so many other things, ignoring a lot of red flags in the market. So I just wanted to say that. So that's that. And again, we'll probably know next week. I mentioned quite a bit on this. If you shorted it in anticipation of the failed breakout or of any of the pushes back up to the 200-ish level, or even right here, you have minor resistance at 208.48, and then the next resistance I have is at 215. So if you're swinging for the fences, i.e. looking to hit a home run or a grand slam, the meat and the big, swing down to the bottom of the range and then below, then as I said a couple weeks ago, you could give it to to that max. That would be about the max, really. And we can punch up a little more next week. We still have plenty of room to keep those divergences intact. And that 208.50 is really a better resistance level and a better stop point, either on a daily close or at most a weekly closing basis. So there's your index update, if you will. 60-minute chart also shows you on IWM on the small caps. Another reason I gave it I'm still giving this one room as a swing position. Your little wedges here, and these are all coming at those highs on that multi-year, nearly year-long sideways trading range. You had a rising wedge, negative divergences, and then boom, drop. You had a divergent low, divergent high, and again, we just put in on the 60 a divergent high, and we're just coming off that. And just like, surprise, surprise, just like SPY, just like QQQ, just like the semiconductors, just like NVDA, we've got these big trend lines and they're all there. And that's why I'm kind of excited about this. That's why I'm picking up the frequency of my videos. Can't guarantee they're going to break, but it's one thing to have a well-defined trend line on, let's say, the S&P 500 break, or whether you're bullish, it's a downtrend line, you're bullish to go long, or bearish, looking to short. It's that much better when you have another major index, NASDAQ 100, the Dow, if you want to look at that, the mid caps, the small caps. Well, here you have just about everything and key stocks. And so that's why I keep harping on this for those of you that say, okay, Randy, we got it. Those are trend lines. And hey, guess what? Maybe they break and it's a little whipsaw and we go back up. I tell you, it'd be quite bullish. But I have enough confidence that to, like I said, increase what's already been an increasing, still a relatively, what I call a starter position, but more of a moderate position now on swing positions after today, because I think, like I said, I don't want to miss out on what I put the odds of a gap down a lot higher than the odds of a gap up next week when the market's open on Tuesday. And I think I said it in one of my comments today, I don't chase trades. So if I'm looking, let's just say I happen to be on vacation Tuesday and I didn't trade futures. I couldn't get in and I was just away. And I saw all these trend lines go. But by the time I got back to my desk, let's say Wednesday, we'd already dropped, 6-7%. Well, guess what? I missed that entry. Now I can wait for another objective entry. Maybe I'm going to kick back. But so that's why I sometimes position ahead of these things. The charts to me have predictive value, and that's what I like to do. Hence, again, the name right side of the chart. This is the edge, the margin of the chart, and there's where prices end. I'm concerned about what's going to happen over here. I take what's on the left side to deduce what's going to happen on the right, i.e. the future. All right, so that's that. And again, these big trend lines, I would set alerts on those. You can put it on the IWM daily as well. Here, I'll leave that one there because that was a valid trend line. But This is now the one off the October lows that I just showed you on the 60. And obviously all the better if and when that one goes as well. Okay, so there's your updates on the indexes. And let me go back to those clean boards for a second. That was board number 2 here. And show you that it's not just the indexes. You have major sectors and you have things like SOX. This is one of 3 main semiconductor ETFs. Very, very well defined uptrend line. I'll give you my thoughts today. Shorting 2 of the AI kings. I didn't know that other company today, an SMCI, until one of the members brought it up. And thank you again. Up 25% in one day on that. And expect there to be quite a bit more. But this is SOX. And look at all those. I just covered all the reactions to Virgin High. Guys, I have to say it. I don't get too emotional in trading, but I'm pretty excited. I think there's a nice setup, and because of the conditions, the lopsided, one-sided sentiment, bullish sentiment that is, I think there could be a pretty quick rush for the exits. What happens with volatility index. Everyone's on the short vol trade, shorting volatility, and all of a sudden they have to cover. That's why you get those quick spikes in the VIX. So maybe it happens, maybe it doesn't. I'm showing you what I think to be one of the best swing setups in quite a while. So there it is, SOXX. And remember, that's not the only semiconductor ETF. You also have other companies out there like XSD, that's the spiders, which again, I mentioned is still off its high. So the ones that have the heavy weighting, it's in NVDA and all that, it's showing you the same story of the market. The stock market, the vast majority of stocks are well off highs, and they're much more closer 52-week lows. They're in bear markets. Again, it's a relative handful of stocks that give the market this false guise of the stock market being strong or stronger than it really is. Again, a handful of super duper mega cap, $1 trillion or close to $1 trillion companies that have a tremendous weighting on the index are the ones lifting it. And if you don't believe me, just go through, click if you have TC2000, load SPY, and then click through all 500 components and go on market cap, or sort reverse, start, go to, I'll show you how to do it. Today let me just show you the one other semiconductor ETF, that's SMH. And that one also has, you can see an uptrend line off the October lows, and then a smaller trend line here in which to trigger a sell signal. So if you want to, kind of enter short with impunity, try to hone down on a short on the semis, you can wait for these to go. And I'm going to get to NVIDIA again, because NVIDIA is the undisputed king. Intel used to be the king of semis, and then they lost that title. But NVIDIA is not just the king of the semis now. It's a $1.8 trillion company, with the next largest being Taiwan Semi, I believe, at about $670 trillion. So it dwarfs it. And if it dies, I can all but guarantee you the sector dies. Sooner or later, it's going to at least correct. We all know that. I think even NVIDIA bulls. Where I might differ from those is where it's going to go. And I think that the next turn, which I believe is imminent, or I wouldn't have started shorting it today, is likely to be, the start of a much larger drop than most can even imagine. But we'll see. Time will tell. And I'll keep you posted on that trade as well. Okay, so there's all the semis. Like I said, trend lines. You can set alerts. You just, in whatever charting program you use, set a trend line alert. And my guess is, whether it's next week or not, they'll be going off like popcorn. So if you have, as I do, alerts on IWM, SPY, QQQ, SOXX, NVIDIA itself, all these, you'll probably bing, 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 bing. You'll be one of those 3+ down days in the market. My point is, you got to kind of move. If you wait too long, you may be denied an objective entry. And look, here I am getting a little excited on the bear case because I can see the potential for a big move. I think it's ripe. But on the flip side, and I've said this over and over again, if you have a differing view and you're bullish, and at least near term, and you think there's more upside, go long. These same levels I'm showing you are key, I believe, to be key support levels. I feel confident they are, and therefore you buy them if you're bullish. For an example, just what was it, 2-3 weeks ago, not even 3, I went through the FANGs, all the Mag 7, or what I call formerly known as the Mag 7. The Tesla's certainly not a Mag 7. If it's, it peaked back in 2021. We're in the year 2024, and the stock is 51% off that high. It's cut in half where it peaked, years ago. So I wouldn't call that a Mag 7, would you? Nothing magnificent about that. But you have the, as I said recently, right here, 179.50 had a beautiful downtrend line. I said would trigger an objective long entry, and you could buy it here at support. So if you did, and there were multiple opportunities, I first started highlighting it right there, then I highlighted again there on the trend line, and I said clearly that to me it was a favorite of those Mag 7. And I said, look, personally, I'm passing on just because my views on everything. I'm going to just keep dry powder to, on other trade ideas right now. I don't like picking up nickels in front of a steamroller. But again, if you're bullish, I'd point it out. This is one of the best setups I've seen for a while, at least for a bear market rally. And the stock is up 12% since then. And it was a beautiful little breakout. And, if you didn't take it at support, or if you did, you would have added on the breakout there. And you still would have made, since the breakout into today, about 8.5%. So that's the takeaway, guys. I will tell you my thoughts. I'll give you the key levels. And sometimes, and the only guarantee I ever give you is I'm going to be wrong. I'll be wrong a lot. So hopefully you can, take parts of my analysis, discard what you don't want to, pass on the trade ideas you don't agree with, and or take pieces out of the analysis I give that may mesh with your outlook and how you want to position. And feel free to ask me anytime you want my thoughts on something. I'm going to get to that in a second too. There's a couple questions on the site. So that's it for the stock market. I'll get to, while I'm on the market, let me just finish there. And I will get now to NVIDIA. I gave you a whole post. It was detailed. I don't need to add a lot to this. Clean board. This is my clean board. Just shows you, here's that uptrend line. This one's off the January lows, very well defined. Divergence, everything. Again, that's my busy board, has all the divergence lines and everything else. Pending high-level bearish PPO crossover. Again, I got a post out to you earlier. I think it was on this board here. Yeah. Earnings are coming up on Wednesday after the market closes. And so if there's ever going to be a fundamental catalyst that can send this thing down, now, of course, it can continue it up, but based on my analysis in the charts, that is not the most probable or likely scenario. And I also need to add, for those of you new, if you haven't followed me for a while, you heard me say this 1,000 times regarding earnings. The initial reaction that happens in the after-hour session is not always the reaction that sticks. Sometimes it is. This stock could explode up. I've seen this many, many, many times, especially on big tech companies where they rip or dip. But ultimately, and you've also heard me say this if you followed me for a while, more often than not, which is not the same as always, but more often than not, if a stock has a clearly bullish or bearish technical posture heading into earnings, that is the next direction the stock will go. And again, I'm not talking about in the morning or after hour session when they report or the very next day. I'm talking the next trend over the following weeks to months. And this is clearly a bullish uptrend. 99 out of 100 people look at this stock and say, my God, you're crazy. There's nothing bearish about this. Yes, that is a strong bullish uptrend, but the technical posture, when I put on all my lines, divergences, overbought conditions, PPO rolling over here, poised to make a high-level bearish crossover. Here, I'll show you what that looks like. So, on a lot of stocks, and the higher the better. But this is a bearish PPO crossover. It was mid-level, not very high, but it still led to a multi-week, a double-digit drop. There was a bearish PPO crossover there. So that in itself is a sell signal. There was one, you had a whipsaw, false bullish crossover, and then it gave you a bearish crossover, and you got that. So simple stuff, guys. These in themselves, there was a bearish crossover. You got that. You got that. This was a high-level bearish PPO crossover right there, and again, it didn't do much. And this is why this is a good example. That was a high level and tried to cross. Nothing really happened. A couple things to that, but the most important takeaway is nothing that I've ever come across or probably ever will in technical analysis is 100% effective, meaning no sell signal, no buy signal. If it was, I wouldn't be working. Well, actually, I would. I do this because I love this. I sit here every day. This is my passion. But the point is, we could just set a automated program to take that signal and then travel the world and just buy as many private islands as we want or do whatever with our money. So keep that in mind. But again, I speak in probabilities, and there's, you can go through there, do it yourself, go through all the bearish PPO crossovers. So I don't take trades solely on that, but it certainly adds to everything else. So when I put on all my lines, I have the uptrend line, I've got divergences. You can go down to a 60-minute chart. Here's a 60-minute trend line right here. I'm going to tweak it right now a little bit just because I had that cutting a little close. Look how beautiful that little short-term trend line. Again, that's the same one off the January lows. I'm sorry. Same trend line. Divergent high. And it's, doing what it's been doing. It goes up, it consolidates, sometimes has little corrections. I know that the short interest is very low. Nobody wants to short this. I guess I'm speaking not literally, obviously, metaphorically. And that's why I wanted to today. I'd rather get in. I don't want to miss next week. It's not going to, you could see some nervous profit taking before they report. And it wouldn't surprise me, actually. And that's why one reason I wanted to take a short today, among other reasons. But again, it's a starter, plenty of room to add to it, which I plan to do only if it goes in my direction. I'm not going to scale in, on a short as it goes up. Experienced traders typically average up on a position, meaning, if you're long and your position breaks out and it's going in your direction, then you add to it because it confirms that you are right, the reasoning that you had for that trade. Whereas retail traders tend to average down on a losing position, and then they, just to lower their cost basis or whatever, and it's not always a good idea. I'll do that when it's a predetermined plan, if I plan to scale into something, even if it's going against me. But like I said, in this one, took a starter, and I'm either going to add to that position or if there's a crazy post-earnings pop, I might add to it then. I'm pretty flexible, but for the most part, that's my plan, not to add unless it breaks down and gives me a sell signal. And again, it looks imminent, and yeah, that's that. And then you go back here, and you can see that, where was that failed? This was that whipsaw right here I was showing you on the other board. And that one, that followed a huge, this was a breakaway gap right here, or maybe a continuation gap. Yeah, more so. You can roll back. Yeah, that was a breakaway gap right there. You can see there was previous big reaction high here. We came up, we were testing it. Boom, there's your breakaway gap right there. And so that's why that bearish PPO crossover, in my opinion, didn't play out for much of a sell signal. Okay, don't want to spend too much more time on that. My long-term targets are what they are, have been what they have been. Again, for those of you new, when we were right here and everybody believed we were in a bull market that had a lot more room to run, I was calling for a bear market. These are old targets I listed then, and they were hit. We hit to the button, my second target right there. And at that point, there were reasons and covered on the side of the time to go long this, cover this short, go long this stock and others. And it was a 69, no, not a 69. That was what I'm calling for. Hold on, was it? Yeah, I guess it was. Yeah, it was a 69% drop. And then we bounced. And so my third target has yet to been hit. It's still, semantics, whether this one, obviously, won't want to call this, it's in a secular bull market. This was just a correction. You might say 69%, you're crazy. Yeah, when you look at a long-term chart, this is a secular bull market. And again, definitions of correction in bull and bear markets are relative. And you can see here, there's your primary bull market uptrend line, one which I think at one point this stock will see in the coming years. Probably take a couple of years to get there would be my guess, but we'll see. Anywho, if we hit T3 from where we're at now, and I have other targets before then, I will almost certainly not be short this stock the entire time. Down for that 90% drop, I'll be, as I was back then, in trading the last bear market, covering on the way down. There's the first target right there, first place. Actually, the first place, I think they'll step in and buy it. It's here about 637, 638, then 500, certainly a very good support level. They'll probably come in and buy. You've got the 200s below there. So like everything, nothing goes straight down, but things with a lot of hot air tend to go down a lot faster than those without a lot of hot air. So speaking of that, and again, I won't go over it. I gave you the comparison today on the screenshot of that other one, SMCI, how they look almost identical. It's almost scary when you overlay the charts. They have, and again, this one's also, I read up on it today. I didn't even know what it was. I shorted it before I even knew what they did. Just looked at the chart, said that's close to being done. And yeah, it looks pretty done now. And they are one of the big AI company, and they I just read a little bit about them, but that's what they're into. And there's it's just like NVIDIA had a perfect sideways range over the same period of time. This is the AI bubble breakout right there, and it's legit. We broke above a trading range, and it went up. But this is just looks to me a lot like a buying climax, as I said earlier today. And then, as I said earlier, you had a bearish engulfing candle, so that's a very high probability, especially when it comes after such an extended uptrend. They're simple. You short them, take it on faith, put a stop above it, because if you go above it, it's no longer bearish engulfing. And you can give it a little bit of room in this market. Sometimes they'll try to, or if you want, and sometimes you keep a stop wherever you want. I mean, drop 30% or 25%. Yeah, that's where I'm at today, because it was a little higher at first. So from high to low, it fell almost 30, I think. 25, 26. Closed below the trend line, by the way. And this is what it looks like on an hourly chart. 800 is you have a gap right there, and parked right on that gap support, but below the trend line. So these are levels that have taken out next week. We'll most likely see the stock continue down. So if this bull market has a lot more room to run, stocks like this and NVIDIA are going to keep. This is just going to shrug off this bearish engulfing candle, and they'll gobble it up, and that's very bullish. It just shows a tremendous, overwhelming supply of buyers versus sellers at that time. But I look at this chart and I have more than enough reasons. This is a high probability short trade. So, like I said earlier, if that targets it, it's going to be about a 67% drop. Alrighty, next up, I'll just show you a few other stocks that stand out. I'm looking at the some of the big losers today. Now, overall, it wasn't that bad a day in the market. Let's see, make sure I have my after hours turned off, which I do. SPY was only down. It closed the day down 0.5%. QQQ, tech heavy down 0.9%. And the small caps down 1.36. So, which is not much. It's run of the mill for the small caps. So really nothing too ugly. And I'm looking at the sectors. Biggest one was communication sector down. But, overall, probably wasn't a lot out there to scare anybody. And again, remember, we didn't have those sell signals yet. Closed right on the trend lines. But I'm going to go over a few things here for you real quick that stood out to me. And again, what I'm seeing is companies getting taken to the woodshed. When you look at this, you say, it's a bullish chart. I mean, everything. Yeah, I still maintain this is a bear market rally. And again, it's semantics, whether you want to call it a new bull market, like the street's calling it, or when I say the stock market, I'm talking about the majority of stocks out there. That's the stock market, not any one index or any one sector. And you can see this guy here, put in a divergent high back when the bear market, or this one peaked back in early 2021. It fell down 92%. It's auto parts, and it rallied. But when you look at it here, it's still down from its peak in early 2021, 71%. And so this is just typical bear market behavior. This is what it looks like, especially if you frame this bear market from the get-go, as I have. It's going to be a much longer and slower playing out bear market with bigger waves. And I think, and I haven't heard many that are on the same page with me on that. They're all just comparing 2008 and 2000. That's the ones I'm hearing about. And based on everything I've covered for a year or more now, is going to be different. So I'm seeing a lot like this. And so this one broke down today, and it was probably earnings induced, 26% drop. And this isn't going to move the market, but I'm seeing more and more of these, and I'm watching for things like this. So there came off a divergent high right there. And you can see how you can swing trade these things, divergent low, rally, divergent low. These are bear market rallies. And then ultimately, if it starts taking out, this is what you want to watch for, especially on important stocks. So we know whether you want to call it a bull market that we've been in since 2020, mid-2022, October, or you want to call it a bear market rally, again, semantics, whatever, however you want to call it. But what you want to look for, I can tell you now, is, an uptrend is defined as a security making a series of higher highs, which it was here, here, and here, and then higher lows, which it was here, here, and here. Now, so far, we fell. This previous reaction high fell shy of that one. Now, you can't call a turn yet from that. You do have a break below a trend line today, so if there's follow-through, then that will give you a sell signal. It's not a super-duper good trend line. It's only a couple reactions. More importantly, do you take out this low? And do you do that before you go on to take out this high? So, if it can rally up here, and I'm picking this one stock, not that I'm not even trading this one, just as an example for what to look for collectively on the major sectors, the indexes themselves, and key stocks. So, as long as it reverses before it takes out this low, that's keeping the uptrend alive and intact and healthy, right? And if it does take out that low, then you have another reaction low there. And the more of those reaction lows get taken out, the more the evidence shows this was simply a bear market rally. And when you look at a weekly chart, and this is what I do all the time, and I spend a lot of time in these videos doing this for you, and showing you why I, see things different than other people. I think a little more short-sighted. When I look at the majority of stocks, I see a bear market in play. And yeah, I understand. I get it. NVDA and Apple aren't subscribing to that model because they've got financial engineering that the others don't have access to. Massive amounts of capital. They're the juggernauts of companies. You can't knock them. But they give that distortion to the index. But this is the stock market here. A lot of stocks looking like this. And this stock peaked back in 2018. And I didn't really pick it. I didn't even think to go to the weekly charts. I'm kind of just doing this video ad lib right now. But that's what you're going to see in this one and a lot of others, I think. I don't see any evidence of a concrete bottom when I look at this weekly chart. All right, let me move on so I can wrap the video up. I wanted to get to a couple more things. So here's Roku today. I believe, I don't know if this was earnings or not, but Roku smacked down 24%. So I'm seeing some former high flyers, and I'm picking companies that have a pretty good sized market cap. There's that SMCI. I already covered that earlier. I'm just looking at the ones I flagged that were down today. Nope, I didn't mean to get that one. THS, Treehouse Foods. This is a $2.4 billion company, so it's not a small company. Just whacked down. That's earnings. Yelp used to be a crowd favorite as well. This is what happens after. This is what I expect to happen in the market. You put in these divergent highs, you start to get sell signals, start to break support. Then you take out key things like it took out the 200 days today, 200-day moving averages right there, the blue and red lines, in one fell swoop, and the stock was down 15%. Now off the highs in just a matter of, since the beginning of the year, it peaked right around the beginning of the year, this stock is down 23%. And that's why I'm doing this video, because I want to convey how fast I think things can turn here if we get those sell signals I'm looking at and continue to go on a break. Remember, there's some good support levels below that I can almost guarantee the buyers are going to step in at. But then if we're looking out weeks ahead, let's say we get those sell signals next week. Then in a couple weeks or a couple days, if we're down to the next supports, how does the market react? Are the buyers come in aggressively? I expect they will initially. You might see some swift doing the VIX is going to spike up. If I get the breakdowns I'm looking for, remember there's four things: Meta, Amazon, SPY, and QQQ. If we'll keep it very simple, I've been saying that for 3 days now. If they take out Tuesday's lows, boom, that should be game on. And then the VIX will rocket up, then volatility's high. So it's going to, then if you don't know what you're doing, keep it light, paper trade, stay aside, watch, learn, whatever you do, don't dive in head first, and be careful when I'm, sometimes I'll tell you what I'm doing. I'll trade high flyers, natural gas, and, shorting, what is it today? Those two AI stocks, things like that. That's aggressive stuff, guys. And as I said, I had zero sell signals. It was more of a instinctual, experienced trade. just looking at it, something kind of getting, okay, this is now, you got to get in here now. So don't do that if that's not your wheelhouse there. All right, a couple more and we will wrap up. DM, did I want to cover that one? Thought I had some more marked. Carvana, yeah, Carvana down. Carvana, that's a run of the mill, now 9%, but this one's looking really nice. I shared it with you before as a trade idea. It's just taken forever to get there, but it has big resistance right here. Big resistance, about $58. Got rejected there, got rejected again, got rejected again. This time it had a divergent high and had a bigger drop. It had even a bigger divergent high. It's the same divergence, and T1 was already hit, and it's T2, T3, T4, T5. Then I'll probably add additional targets if the market breaks down. And if you short it, you don't want it to go too much above that previous reaction high right there. I can say if it does, you're still going to have negative divergence. So that's why I would give it a little room again if you care to. You want an objective short entry other than a pushback to 58 area, a break of this uptrend line right there. And that one also comes off. You got it. The October lows right there. That trend line. All righty. What else do I have? DLR, Digital Realty Trust. Beautiful little rising wedge, divergent high. Sell signal today. There's an objective short right there. Last time I had a divergent high. Stock dropped 13%. This is an even bigger divergent high. I expect it to fall even farther. DoorDash closed right on the trend line, so maybe next week. Adobe got clocked today. I've been watching this one for a while. Divergent high one, hit support. I even gave it as a setup to you. I guess back here. I can't even remember because I've had these marked up. T1, T2, T3, but S1. When I put S1 or R1, R1 means first resistance. So like on the recent IEP trade. Oh, by the way, I closed that out today, guys, just because I'm getting my barometer's kind of heating up right now, and I decided to close this one out. It's in no man's. It took out T1, so it may easily. If the market doesn't roll over, it's probably going to go up to T2 at least or T3. That's my current final target. But that's why I gave you R1 was entry, it was resistance at 1890. So when the day we popped 1890 right here, and I just wanted to clarify that's what I mean by R1 and S1. So that's it. That was S1 right there. It was resistance, resistance, breakout candle, back test, successful. And now, like so many things that have broken out to new 52-week or multi-year or even all-time highs, a lot have negative divergence and overbought conditions, and this is what will happen to most of those, in my opinion. And again, it happens pretty quick. 200 days is coming up on, but still. Yeah, probably. I don't know. I don't have a position in it, but this is where it's going. And now you can see how well that fits. This was a trend line I had here before from the September lows, and it comes right in. By the time we get down here, I put good odds that we're at my third and final swing target zone. Do something like that, and then boom. And then that might be a good time to go long. You'll have dual support right there. But until then, probably have another 19% downside on Adobe, and this is a big tech stock too. All right, let's move on. Let's wrap this video up with the there's a little Q&A I wanted to cover, and then I'll get to the bonds real quick and the euro, because that's something to watch too. All right, so Q&A I went through. There's not many today. It was a quiet day for questions, but this one I just put it out there after I gave you that update on silver. I just wanted to confirm for you futures traders, that's tell you what I trade, is that we also hit. Remember, this is the setup was back here on the 8th. I first put it out there and said, just like on silver, you can start it here. We had divergent, and we got that initial bounce and or down to right there. That's that 22, that coincided with that support level on silver. And as you can see, just like SLV, the ETF, that was my target then. I even put a couple other charts after 23, what is that, 3386, we'll call it 2338. And then that's what we hit today to the button. So that's swing trading. And of course, there were micro trades to be made all along. There was that $22 support. So on silver futures, to measure it out. And that was, I can't grab that line. If it's purple, it'll move. So I go a little below and then I'll stop a little bit above. That was a 6.5% run. And you can see it's put in a little divergent high at the top. So that's why I said, you may want to, if you haven't done so, and that was your plan, consider at least either booking profits there or raising stops if you want to hold out for any of these potential additional targets. Okay, back to the Q&A. I wonder if you could look at the chart, 1 month chart for Meta. I missed that part. I looked at the chart. I was going to go over it because I've been covering Meta. Meta's one of the 2 of the Mag 7 I'm waiting to see break. Remember, on Meta, I want to see it break. Both Amazon and Meta have the big gaps. And Tuesday's lows should do the trick. And so it's about 454.43. And then I expect a gap backfill. But although if it happens soon, like next week, and it's a hard down, it's going to be a big down. We'd have to drop from where we closed today about 18%. But remember, we have a primary uptrend line that they're likely to come in. What I think would happen, well, there's also, even though the gap is technically there at 394.50, there's that candle high right there. And sometimes people look at the reaction highs that came right around a gap. So call it that level there, which is, what is that? 406.21 down to 494.50. This is a target zone right here for Meta. But the question was on the monthly. Let me see. It's kind of see, Meta. I don't look at the monthly often on it because this is one of the newest Mag 7s. It only came public in 2012, so there's not a lot of history on a monthly. That's why you can go look at a weekly and daily. And like I said, no sell signals, nothing remotely close to a sell signal. But that's what I'm waiting for, a break. And then again, if it comes in the form of a gap down next week, you have the potential for an island cluster top as well. So whether we get that or not, or it just moves down through there, that's it. So that is the sell signal I'm waiting for, along with Amazon, which continues to dance on that gap all week. I've been saying we need to take out that level, including that little post-opening dip right there. There's Tuesday's low. I think the next break below will do it, probably before we even get there. And that's that. Okay, I think there was one more Meta. Oh yeah. So I'm a day trader. Says, hey Randy, if you like parabolic finds, here's another one. Thank you. I appreciate these ideas. ANF. I didn't short. I didn't read that till after the close, but I wouldn't have shorted anyways. But I'll share it as a setup. There's a beautiful little uptrend line you can see there, right there. A nice lot of reactions. Very overbought, negative divergence. So it's just simple. Here's what I do. Set a price alert. Forget about it. This thing could continue up that trend line for another 20-30%. If and when it breaks that trend line, I will get a price alert. I'll look at it. I will check volume. I'll check the market, what it's doing. Ideally, I'd want the market to be on a sell signal, or at least not at support or anything like that. And yeah, unless ANF, which this is Abercrombie and Fitch, best to my knowledge, they've been a clothing retailer, but unless they invented cold fusion, I don't know what's going on here. The stock going, almost vertical like that. Look at that, declining volume. Nobody's buying this thing. This is just some orchestrated, maybe a stock buyback program, and there's nobody on the other side of it shorting. I have to imagine short interest has been blown out of that. And so when you get that, it's like there's a vacuum below it. It's just, I'll probably, if the market confirms, I'll probably hold that. I'll short it and hold it down to here about $49, right there. And that would be, from where we're at today, about a 60% drop. So, yeah, there it is. You can see it on the weekly chart. Yeah, again. So, well, that's that. So we'll see. We'll get a sell signal. If it triggers and anybody's in it, let me know. I can study it further and try to find a little shorter term. I know sometimes my targets are too aggressive, and some of you might want to take the short buck. And I imagine a lot would if they're in it. But like I said, I don't see a whole lot of support, and just eyeballing this chart and knowing what the company does. And again, I don't. Maybe they pulled an overstock. I didn't pull it up. The news. By overstock, I mean, you guys probably know this. Overstock.com was like an Amazon, second tier Amazon forever, and then they got into the crypto sphere. one way or another, and it's still in my crypto watch list as a crypto proxy. I mean, they still run their website for buying goods online, but so I don't know. Maybe ANF did something that justifies this run, but I don't think they're selling that many tweed jackets right now. So anyways, we'll leave it there. Let me make sure that's all the comments or questions. Yeah, that's it. All right, guys, I'm going to wrap it up. This is a long one, but you have 3 days to look at it. Trading will pick back up on Tuesday. And, let's leave it here. Economic calendar. Okay, other than NVDA, which one way or another is going to put some volatility in the market. We're either going to see it take the market up or down. You guys know my thoughts, but you also know the levels that it needs to break to trigger an objective short entry. Anything in advance, taking it in front of that is certainly aggressive. This is the economic calendar for next week. Today's Friday. So remember, the markets are closed Monday. So on Wednesday, FOMC minutes, that certainly has the potential to move the markets. And then you can see here on Thursday, we have jobless claims and existing home sales and a bunch of Fed mouthpieces going at it later in the afternoon or later in the day. That's it. So that's it. There's what we're looking at. These are the things that also could move the market next week. FOMC minutes and Thursday looks like the big day for the economic calendar. Okay, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.